We also would like to recognize our special guest that is also being represented by Mr. Easy. You're welcome, sir. Thank you, sir.
This is the Life Business Exports Unit and Export Unit of Union Bank. We also like to thank all staff of Union Bank for the present. Also coming to the house once again, we would like to thank the team of owners. Thank you for coming.
We represent every team that is available, that is present here, the Dean of College, the Dean of Programs, the Dean of College, and we want also to appreciate our available staff, head of department, and directors. Please let us around, let us all around your place. As well as the students as well, please clap for yourselves. You are welcome.
Without further ado, we would like to call on Professor Augustine Maiden for his opening address. Thank you.
Vice Chancellor, the Registrar, Bosa, the guest speaker representing the MD, CEO of Union Bank, Mr. Eze Nwakama, the representative of the chairman, New Period, member of the entourage from Union Bank, friend of the university, former BBC, this patrons, directors, chairman of ceremonial committee, senior professors here credits, staff and students. I greet you all and I welcome you on board as we have this our maiden learning, which will be educative, informative, and beneficial to each and every one of us. It is with immense pleasure and a deep sense of purpose that I welcome you all to the maiden college of the College of Food, Agricultural Science and Technology, lecture titled Innovating Financing Models for Sustainable Agriculture and Food System in the age of AI. To be delivered by Mrs. Yevgeny Oyen. However, she's being represented by Mr. Eze Nwakama. Here at the Excellency of Technology, Dr. Today's gathering is not just another item on the academic calendar. It is a landmark event, one that symbolizes our growth step as a college towards fostering the culture of critical thinking, innovative dialogue, and knowledge sharing on present issues of our time. The title is very germane and important because of the contribution of agriculture to overall GDP, natural development and food security globally. I want to state unequivocally that the college is open to engage collaborations in the area of facilities provision to support agricultural research and development. So this is paramount to its relevance to our nation's survival as well as our existence as humans. It is sacrosanct for food security and nation building as a global proverb indicates till the last kúrò nínú ìṣẹ́ òṣì, literally meaning if hunger is excluded from poverty, then poverty is conquered. One of our departments, the Food Science and Technology Department, also significantly contribute to the development of the college through a number of grants and other research innovation. It also provides students with in-demand skill and supports the college in creating a strong education and research environment. BERS is a pace setter. Guess what? This college offers students privilege to study and obtain a degree in agriculture in any of the listed 3 options: agribusiness, animals or fishes, and agronomy in free tuition basis. I think we deserve a round of applause for that. As young breaking innovation under development individual sponsorship of former president of Nigeria and promoter of our great institution, His Excellency Chief Olusegun Obasanjo, DCFR, to revolutionize agricultural studies, which is hitherto known for low environment, They are also privileged to engage in soil farming technique too. At the junction, please permit me to acknowledge the wonderful support enjoyed from the BERS University management led by our indefatigable Vice Chancellor, Professor Jeremiah Olufere. Our coordinated college lecture committee led by Professor O.S. Not only behind the scene environment that Professor O.A.E. all staff and students of the college, all those that stood with us and been stood with and behind us through sponsorship and others. I go for my camp and say a big thank you and God bless you. Finally, I claim the influence of the entire college to listen to our guest speaker, follow the program through and do a few things that will be beneficial to our growth. And as eye-opener as it may be, this lecture from our guest speaker will no doubt enrich our views and understanding about innovative financing model for sustainable agricultural and food system. Please enjoy the lecture. Thank you.
We would like to welcome you all once again. Please, we have some slides outside for exhibition. So after the event, please you can avail yourself with some of the exhibits. Also, on display is a book or different books written by our renowned professor of food science and technology, Professor The first book is on business resilience and entrepreneurial blueprint for thriving in challenging times. And so we can go, let us stand outside for that. We also have the memoirs of the cow without a tail. Memoirs of the cow without a tail. That's also another book. We also have scientific writing and communication for developing countries, also written by him as well. And finally, we have another food safety guide, the Consumer Product Guide for Food Safety and Nutrition, which is produced by the Consumer Advocacy for Food Safety and Nutrition Initiative, otherwise known as CASANI, which Professor Olufere is the chair. Thank you very much.
Thank you very much. So now, let us give a warm welcome to the BPM chairman that is being represented by Barrister Aziza Ajana for Nigeria Revolution. Please let me have a warm welcome. Jeremiah members of the Investor Management, distinguished dignitaries, esteemed speaker, inestimable parents, guests, students, and fellow participants, I acknowledge your presence. I am Barrister Jagafisa Tolanike, the legal advisor, Girls University Parent School, and I am here today to represent Mrs. Adefoke Ayokonle, the chairman, BUPF, and today's chairman of this Maiden annual lecture. She sent her good message as thus. As the chairman of the Maiden annual lecture of the College of Food and Cultural Science and Technology, CONFAST, the University of Technology, Otta, I warmly welcome you to today's discussion on innovative financing models for sustainable agriculture and food system in the age of AI. This training topic addresses pressing global challenges. Our speaker will share cutting-edge insights on leveraging technology and finance to transform agriculture. I appreciate our esteemed speakers, expertise, and participants' enthusiasm. Your contributions will enrich our understanding and foster meaningful discussion. Thank you to the Dean, College of Food, Agricultural Science and Technology, Professor Augustine Omoike, and Professor Oluwafemi S. Enilogobo, the Chairman of the Listening Committee, the entire committee members, and the supporters. Let's explore new perspective and advance our knowledge of sustainable agriculture and innovative financing. Thank you.
Thank you, Madam, for your presentation. We have online viewers, and so they are unable to actually see the presenters here. So we're going to move the lectern up. So please, we apologize for the slight delay. Apologies for the delay. We'd like to make welcome the Vice Chancellor of Bells University of Technology, Professor Jeremiah Ojediran, to make his opening remarks. Thank you. And we all stand up in recognition. Thank you.
Thank you, Mr. Speaker. Sometimes it's good to be forced to stand up there. Everybody was standing there. I'm a very shy person, so the registrar was all these here present, all professors and members of Senate, our staff and students. Let me make welcome the entire team of the Union Bank. My own bank. I told them that I opened my first account with them very many years ago. They are strong and reliable bank. I want to welcome you warmly to Bells University of Technology, Hotel. Distinguished ladies and gentlemen, on behalf of the University Management, staff and students of Bells University of Technology, and with very great pleasure, I welcome you all to the Maiden annual lecture of the College of Food and Agricultural Science and Technology, COFAST, holding today, Wednesday, 28 May 2025. Let me give us some little historical background for the benefit of our visitors here today. Almost 20 years ago, our founding fathers took a bold step towards the establishment of Bells University of Technology as the first private university of technology in Nigeria. I thought you would clap for us. It's not easy being first, particularly because University of Technology is not easy to establish. It is highly capital intensive. I'm sure we recognize that very much. But our founding fathers had to bear the cards in establishing the first private university of technology in this country. So presently, at the 20th year of operation, we have witnessed remarkable landmarks, developments and achievements. For this, we sincerely acknowledge the vision of the founding fathers for investing in the educational landscape of this country. And let me at this point reiterate that they have provided a very strong platform for which we stand today. One, to educate ourselves. Two, to impact the society. The College of Food and Cultural Science and Technology, COFAST, is our youngest college and one with a clear-cut mandate for successful incursion into the agricultural landscape. It is set up as a special purpose vehicle aimed at making a mark in global food security and also to blaze a trail in all other relevant scheme of things, particularly in agriculture. Our partnership with NIMEX, the Nigerian Meteorological Agency, has yielded the siting of the Met Center here on campus and also at the Ambassador Farms. Likewise, the partnership with Soilless Farm is yielding results with the siting of 2 greenhouses on campus for instruction and practical sessions for the newly approved agricultural programs. This is coupled with having Soilless Farm resource persons co-teaching students on new techniques in soilless farming. And just a few minutes ago, I was telling Mr. Eze there that we are moving away from the traditional farming into new techniques of farming, and that is the soilless farming, to attract our young ones into this area that will liberate Nigeria from poverty. All these and more are part of the drive towards being relevant in new trends and providing quantifiable solutions towards food and nutrition security in Nigeria and beyond. We therefore seek further opportunities for collaboration in this and other relevant areas. It is worth noting, therefore, that this lecture is a commendable landmark for the new college that is less than a year old. Obviously, we are all eager to make positive and indelible mark. We really look forward to more of this and for other actual visible interventions that will impact lives, and it is starting from here. Today's lecture, Innovative Financing Model for Sustainable Agriculture and Food System in the Age of AI, is apt and intriguing, especially at a time like this, when universities repositioning and making incursion into the agricultural landscape. It is pertinent, therefore, to ponder on how AI is changing and will continue to change agriculture. Want to improve crop and livestock management through AI, leading to increased food production. Farmers can then make data-driven decisions about planting, harvesting, and animal care, which results in higher yield and better quality of their produce. Let me at this juncture welcome our farmers to this lecture. Can you please rise and let us see the Farmers Association are here to visit you. Thank you so much for being here. Please be seated. As good and relevant as AI is to agriculture, our people have an interesting saying that soup weighs sweet. Now it's a killer, the money killer. Therefore, the Union Bank is here today to further attest to the fact that it is money that makes sweet soup. Hence, we are here today to listen to how AI will be funded so that we will get the best out of it. Ladies and gentlemen, in closing, I wish to especially appreciate our guest speaker, Mr. Eze Nwakama, the head agribusiness and non-oil export, who is representing Mrs. Yetunde Oni, the MD CEO of Union Bank Limited. I note that Mrs. Yetunde Oni was appointed the first female managing director and chief executive officer of Standard Chartered Bank in Sierra Leone in the year 2021. And in January 2024, was appointed as managing director of Union Bank here in Nigeria. Obviously, they are all of those that this Mrs. Yetunde, those who are shattering the glass and the ceiling, and that you must have been because you choose to think outside the box. She's been thinking outside the box for some time, and that's why she's shattering the box all over the place. Thank you so much for coming on board today, and you have been ably represented by Mr. Eze, who will be taking us to our topic of today. Ladies and gentlemen, I sincerely hope that your coming to Bedford will mark the beginning of the mutually beneficial relationship with Union Bank. I also wish to congratulate the leadership of SAFED to this lecture, and also to welcome BUPF, one of our stakeholders here in Bells University of Technology. But I welcome you all to a wonderful outing today. Thank you, and God bless you. Thank you, the Vice Chancellor, sir, for your address. Thank you so much, sir. We would now like to invite cinematography, who would provide us with some, relaxation, okay? Because we are a bit tense. So before the lecture, we want something to make us a little bit relaxed. Cinematography.
Wow. I'd like to welcome you everyone to this special birthday celebration of Dr. A. It is really a special, but it's one of a kind. And I'm sure you will understand by the time we are done today. So I welcome every one of us specially. And I want to welcome, at this point, Mr. Anjori to please come and give a word or note on Dr. Anjori. Please, can you welcome Mr. Anjori?
Thank you very much, everybody. I am very grateful. I am given this opportunity to go and talk about Dr. Aaron. If you see what this doctor has done to me, he has changed my life. I went to the university. I said I want to become. What did I say I want to become? I said I want to read business administration. And at the end of the day, it don't become frustration everywhere. When I write application, they will tell me I have my donation cannot be done with in this environment, that I need to go and change my donation. No, I was at the edge of frustration. When I met Dr. Aaron, who told me that whatever thing I can do, I am actually invited. I now said, I can make it in line with this my donation. He said yes. I said, okay, what do I need to do? He now said, you need to do agriculture. I said, no, I left my village because of agriculture. I am here to look for white collar job and I must get it by force. He said, no, even if you are engineering, even if you are architecture, even if you are what is it again? Then you can actually be anything you want to be in agriculture. I say, hey, do you know what? I'm a business administration graduate and I am now the managing director of STEM farms and agriculture today. Just because of this man. Dr. Aaron, I don't know what to say again. In fact, my friends who have Jagana, but me, I'm here. I'm Jagana, you can see it all over me. I am looking good and fresh. Thank you very much.
A round of applause for Mr. Anjori. Thank you very much. Wow. Jagan has become Jagado. That is a nice one. Please, let's welcome Mrs. Agbarana for our own brief words concerning Dr. Aaron. A round of applause, please.
Wow. Where do I start from? I don't even know where to start from. Well, I am most grateful to God for today. And I must say, I bless the day I attended the cinematography course online. My husband and I were at the brink of a divorce. He wanted me to stop my banking job. Why? Because I was not putting in enough time for him and the children. But after the cinematography experience, I realized that the richest place on earth is the earth itself. I joined Steam's plans, and then I have never looked back.
ever since. I resigned my appointment as an accountant in the bank. Now, I am the proud director of the accounting section of Steam's Farms. Nationwide, can you imagine that? Even my husband has resigned to work as the IT manager in precision farming. We relocated from Lagos to Igora. If anybody had told me that I will be standing here today as a farmer, honestly, I will bet $1 million on it. Ladies and gentlemen, please I want to join the million of others celebrating this great fellow, a man of great ideas, a man of many parts, Dr. Aaron. Sir, I say happy birthday and congratulations. Please join me and put your hands for him. He's indeed a great man. Thank you.
This is becoming very, very awesome. Wow. I forgot to tell the audience. I got a G-Wagon last month, courtesy of my profit sharing as a stakeholder with State Bank. So please can you join me to welcome Liz. He's not just a smallest, but he's a special person to me. Welcome Mr. Smart to also come and give his word of thanks.
Baba, Baba, who go think say as I did like this, I will be among great people. Child, more, me wey be say before I be down, I get visa. To Arena, more. Now so I meet this man, Mr. Aaron. He just tell me say life, no be grand and I jeje. Now so he take me for where I go learn tractor. So they, as I be like this, my life don't better. This man, Baba, I hold you in $1 million times. Oh no. Baba, now you sure pass you. Come to think of it, as I hear like this, me wey say before, for house, my wife and my children, they don't get respect for me at all. But now, they call Baba. You don't say for Yoruba land, man wey no get money, that person don't die. In fact, I don't know where I start from. Baba, if not be you, I don't know where I could be, oh no. Baba, as you see me so presently now, I'm stakeholder. My work will get that table at all. Because as I do now, the work of the money for the farm and my money. Presently now, I don't get time at all. I don't get time. So maybe we could do this thing now. I get like we can go play for like 5 acres of land. See, me when we said before, I don't even get 1,000 naira. But now, I don't get like about 700,000 naira. Happy birthday, Baba. So I let you go.
This is the round of applause, please, for our celebrants. This is terrific. Please, ushers, start sharing the food. Please, don't let the guests go. And on this note, I want us to give a shout out, a round of applause to the celebrant of today, Dr. Aaron. Please let's give clapping as counts. You're welcome. The celebrant of today. You're very much welcome. Thank you.
Oh, thank you very much. I don't even know where to start. But before I will say a little word in my mouth, I think it will be fine to welcome my wife. That is the young lady of the Steam Farms. Please put your hands together. As we make a noise. Thank you very much. Please should we say a few words to us, appreciating everyone that is here for our birthday. So over to you, Darren.
Well, ladies and gentlemen, a very great afternoon to you. Moms and daddies, I want to use this very medium to appreciate everybody, to celebrate with me and my husband, Dr. Aaron. We say a very big thank you to you. But you see, let me tell you something. When my husband told me about Team's Farm, I won't lie to you, I was not feeling it. But I did not tell you, I was with the flow. But then, I saw the fusion between sophisticated people, learned, educated, uneducated, old and young, men and women, fusing together on this agriculture initiative. And let me tell you, I was very, very impressed. I was extremely impressed. And that makes me see the beauty of unity in cooperative farming. You see, this beauty of unity in cooperative farming, it makes me to wonder if there is this unity that is in cooperative farming. It is in this our nation, I mean this our Nigeria. I'm telling you for free, this country will be in a far better place than we have ever imagined. On this very note, I want to say a very big thank you to everybody here celebrating me and my husband. And let me tell you something. As the Ogawa that I am, we as Teams Farm, we appreciate everybody. Our partners that started with us, people that will join us today, people that will join us tomorrow. Thank you so much. I really appreciate you. Happy birthday.
Thank you very much. Please put your hands together for my warm, beautiful daddy. Thank you very much. Everyone that is here today, I most sincerely appreciate you. We started STEAM Farms 5 years ago. What do I mean by STEAM? S stands for science, T for technology, E for engineering, A for agriculture, another A for art, another for T for technology, and also we have N for for management, and then we also have S for social sciences. So we have STEAMs. And what do I mean by that? That we are here to incorporate everyone into agriculture. We used to have STEM in the past: science, technology, engineering, and mathematics. But now we are incorporating art and agriculture into it. Did you know that in our farm, we had legal issues? We're looking for how to solve it. One of our partners, who happened to be a lawyer, stood for us. We were able to win 156 hectares of land. Please, Barrister Tejimola, please put your hands together for him. Thank you very much. Also, we are going into precision farming. What do I mean by precision farming? We know the weather, we understand the yields that we are going to have, so we are able to convince our investors. One of our major investors here, we have Union Bank. Please put your hands together for Union Bank. Thank you very much. So they are collaborating with us, and we are major consultants for United Nations. We are dealing on Food Agricultural Organization, FAO, and we have been teaching people at small-scale farmers how to raise farm at subsistence level. And this is what is happening. Also, recently, Bells University of Technology reached out to us. That is Professor Jeremiah Oludele. He said we should collaborate with Bells University of Technology, and we are starting Operation Spare No Land. What do I mean by Operation Spare No Land? That is, every available land can be used for cultivation. And there is something I saw in Italy when we were moving around. We saw that instead of ornamental crops, they were using fruit crops to decorate the houses. Can you imagine in front of your house, you have trees decorating your compound? Also, we could see some of these medicinal crops, ewuro, to decorate your house. We have dongoyaro and all these things planted around. This is what we want to do as agriculturists. And let me tell you, I did not start as a farmer. I read library and information science, and from there we discovered what we call cinema therapy. What do I mean by cinema therapy? That is using cinema to change people's orientation. And some of these people that came out to talk to us, we use cinema therapy to change their orientation. The home of Mrs. Aragbada would have been destroyed completely, but we cancelled her and we integrated her into farming. She left a banking job, and this my friend, Idamu Adego Biza. You see, this guy has really changed. He was disturbing everywhere, but we trained him on the use of tractor for cultivation. He's the head of our mechanization department, leading people, especially the tractor section. So we are here today to let you know that agriculture is taking the lead, employing everyone from every level. Now I have this poem to read to us. Please, let's follow as I round off my speech. Africa, the land of my fathers, why are you enmeshed in mysteries? How can a land filled with meat and honey be synonymous with poverty and hunger? Several headlines. Hunger in Africa. We see hate from lands with little or no resources. Who has done this to us? Knowledge without education. That is our doom. We abandon agriculture at the site of oil boom. We brag with algebra, calculus, and logarithms, but we lack the applications to solve our problems. Forgetting that there is no software for hunger. Now, people they hungry to party jiwo, gbogbo around Bagasoko to party jiwo. Now that things are falling apart, let's go back to farm. We will finish this discussion with the song of my father that I just mentioned here. Please let some of my staff come around as we sing this song together. Please come around, put your hands together for them. Put your hands together for them. Oh yeah! You're my staff too. As a matter of fact, most times I usually forget that you're the staff of this company. Your excellence, you should be paying me after every presentation. Thank you. We're going to sing this song to Martin. That is when things have turned upside down, everybody will return to farm. To bati jiwo, gbogbo ilẹ̀ ó padà sóko. To bati jiwo, mo ní tó bati jiwo, gbogbo ilẹ̀ ó padà sóko. To bati jiwo, kó tó jiwo tán, ẹ jẹ́ ká tètè padà sóko. Kó tó jiwo tán. Thank you very much.
Making louder, let's clap for them. They're giving us a very innovative and lovely presentation. So let all of us start dusting our cutlasses and hoes. And like our visitors already said, there's no soilless farming. So let us be more innovative and make sure that we actually boost the agricultural sector of the country. Thank you so much, Dr. Roland and team. We are very grateful. All right. I think we've run for your time so far. Are we enjoying ourselves? I can't hear us. Are we enjoying ourselves? All right. So moving on, we are going to be calling on the head of department, Food Science and Technology in COFAS to give us the citation of the guest lecturer in the person of Dr. Adedin. Please let's give it a warm welcome.
Mr. Vice Chancellor, permit me to request that the representative of our guest, our lecturer today, stand up, come over to the podium, and remain standing while I read citation of our guest lecturer, the person of Mrs. Yetunde. Distinguished ladies and gentlemen, Mrs. Yetunde Oni is a highly accomplished financial service leader with a successful career spanning over 3 decades. She has several years of cross-border business development, risk management, executive leadership, and board experience, having held senior position in international and local banks, focusing on emerging markets. In January 2024, Yetunde was appointed by the Central Bank of Nigeria as the Managing Director, Chief Executive Officer of Union Bank of Nigeria. Let's give her a round of applause. Distinguished ladies and gentlemen, before this, Yetunde worked at Standard Chartered Bank, Nigeria Limited, for 18 years. In September 2014, she was the pioneer head of commercial clients before becoming the Managing Director and country head of commercial bank in West Africa in 2017. During her tenure, she developed and executed comprehensive business growth strategies, managed key relationships, and ensured compliance with group credit policy, local and underwriting standards. Prior to this, at Standard Chartered Bank, Yetunde started her career at Prime Merchant Bank in the Treasury and Money Market Group. This was followed by an 11-year stint at Ecobank, Transnational Incorporated as a relationship manager, where she demonstrated exceptional policy in client solutions, relationship management, business development, team leadership, and a talent development skill. Let's give her a round of applause for that. Yetunde made history in January 2021 as the first female managing director and chief executive officer of Standard Chartered Bank in Sierra Leone, a role in which she provided excellent leadership strategies, directions, and performance management skills. Her tenure was marked by a remarkable 50% year-on-year growth in the income and a substantial 160% year-on-year growth in profit before tax in 2022. She deserves a commendation for this. This achievement was followed by an additional 49% year-on-year growth and 43% year-on-year growth in income and profit before tax, respectively in the year 2023. Yetunde is a University of Ibadan graduate with a bachelor's degree in economics. She has demonstrated her commitment to continuous learning and professional development by attaining several international and local professional and leadership certifications, including an MBA from Bangor University. Yetunde is an alumnus of Oxford University, INSEAD Business School, Singapore, a fellow of the Chartered Institute of Loans and Risk Management, a fellow of the Chartered Institute of Bankers of Nigeria, FCIB, a life member of Women in Management and Business, and an invested member of esteemed industry affiliation with within and outside Nigeria. Distinct ladies and gentlemen, in Bears we have a slogan, only the best is good for the Bears. And standing taller and stronger to do justice to this topic is an erudite individual. Erudite will say that he has a passion for teaching. The person of Mr. Eze Nwaka, who has the passion for teaching and the only person among the Italian group who will speak on behalf of our principal, Distinguished ladies and gentlemen, let us welcome Mr. Eze Wakana, the head of agribusiness and export unit of the Stallion Union Bank of Nigeria. Congratulations. On behalf of the Chief Executive Officer, Union Bank of Nigeria.
Thank you very much. Once more, good afternoon, everybody. I bring felicitations from my managing director, Mrs. Sinchide, who is unavoidably absent today. The expo and the opportunities community have another she couldn't come. And I send me to represent her. I thank you for the honor, and I look forward to doing justice to her speech. I will interject with industry experience because the lecture is also going to monitor us. We will also relate it with happening in the environment. The Bells University of Food and Agricultural Science The Bells University of Food, Agricultural Science and Technology Median Annual Lecture. Innovative financing models for sustainable agriculture and food systems in the age of artificial intelligence. Mrs. Itunde Bio, the Managing Director and Chief Executive Officer, Union Bank. The Vice Chancellor, members of the Governing Council, the Provost of the College of Food, Agricultural Science and Technology, esteemed faculty members, distinguished guests, and most importantly, the brilliant students of Bells University. It is truly an honor to be here today for your Maiden Annual Lecture. My name is Eze Wakana, and I head Union Bank's Agricultural Business and Non-Oil Exports. I bring greetings on behalf of my Managing Director and Chief Executive Officer, Mrs. Itunde Bio, who is unavoidably absent, and from the entire Union Bank of Nigeria family. I commend the leadership of this great institution for choosing such a forward-looking team at a time when climate volatility, economic uncertainty, and technological disruptions are testing the world food system. Today, Mrs. Oni has been invited to speak on innovative financing models of sustainable agriculture and food systems in the age of AI. Let me just ask a question. It's not about our speech. Who has not eaten today? Is there anybody else who has not eaten today? I believe you're fasting. I believe you're fasting. I'm not trying to advance to the point that no matter what we do, food is essential. Agriculture is a need. Agriculture is an area where no matter how we progress, agriculture remains with us. It's something that we must find a way of doing. And before I go in, I just want to make one other comment. Prior to this time, when you want to, those days when we were in primary school and secondary school, when you want to describe a medical doctor, you see someone wearing a fine suit with a white lab coat, the stethoscope. You see a lawyer probably dressed with his wig, and then you see a banker dressed like me. And then when you see a farmer, you see a wretched-looking old man with a hoe on his distance and cutlass. I wonder who would really want to do that kind of farming. So I don't expect that anybody will do that kind of farming. But Bells University of Technology has also introduced things that point to the fact that we're ready to move away from the regular and do the irregular so that we can achieve an irregular response. And I like a part of your school anthem that said, "Glow ye offsprings of vision." And I believe that this vision, you will latch onto it. And just like who celebrated his birthday and his team have also made us know there is something in agriculture, and except you sit down to take it, you will miss it. Nigeria's agricultural sector is a cornerstone of the economy and livelihood of millions. Over 70% of Nigerians engage in agriculture, mainly at the subsistence level. The sector contributes slightly above a quarter of Nigeria's GDP. As at Q3 of 2024, agriculture contributed 28.6% of our GDP. Yet, it receives only a fraction of formal credit, around 3.95% of total bank credit to the private sector. This significant disparity highlights a chronic financing gap hampering agricultural productivity and food security. So while I was sitting, I was asked a question: how easy is it to get loan as a farmer? And I know our farmers there will tell you that it's not easy for them to get loan. But people will know that food, which is what they produce, is what everybody needs. Yet, record has it that agriculture receives one of the lowest funding. In 2025, by contrast, agriculture remains underfunded. In 2025, the government allocated 826.5 billion, just approximately 1.5% of the national budget, to agriculture and food security. This is far below the 10% Maputo Declaration target that Nigeria, who is a signatory, has never met. The result is that farmers struggle to access capital for input, they struggle to access technology and expansion, perpetual low yield, and high post-harvest losses. When we talk about post-harvest losses, a lot of people think that post-harvest losses is manageable. But for those of you that go to the market, I'm sure if you know my 12 in Lagos, and you go to my 12, you will discover within Lagos, that is what comes to Lagos. I've had the opportunity of being in Benin and working in Benin for a while, and my first thought was, if I'm governor of Benin State, I don't have business with fat politician. Fat politician can come and sit by the side. Benin is actually the food basket of this country. Let's see the insecurity. But the level of productivity in Benin, we're not even maximizing it as a country because of post-harvest losses and lack of finance to drive reduction of post-harvest losses is also part of the reason why that is happening. If we look at the Africa and global perspective, Nigeria's situation reflects a broader trend in Africa. Across sub-Saharan Africa, an estimated 83% of agri-businesses, agri-SMEs, lack sufficient access to finance, contributing to an annual financing gap of about $74 billion. Yet, the potential is enormous. Agriculture and agribusiness in Africa are projected to become a $1 trillion industry by 2030. Globally, there is growing recognition that innovative financing and technology must play a role in transforming food systems to feed a growing population sustainably. Worldwide investment in agri-food tech is rising rapidly. Private investment in agri-tech has jumped from under $10 million in 2014 to roughly $600 million in 2022, and emerging tools like artificial intelligence are poised to accelerate this transformation. Today, we will explore the issues relating agricultural finance in Nigeria and then delve into innovative financing models such as blended finance, value chain finance, agri-insurance, and AI-powered digital finance that are being deployed to bridge this gap. We will also speak on how AI is being applied to improve financing risk assessment, farm productivity, situating Nigeria's experience in an African global context. So the challenges in financing agriculture in Nigeria. Now, the challenges, when we go to talk about challenges in financing agriculture, stand on the side of banking, looking at practitioners, and I want you to know that these challenges, you can only solve the problem when you understand the problem. At times, a lot of people don't want to understand the problem. You go more on the emotional side. Banks don't want to fund us. No. But I want you to go slowly with me as you take on these challenges so that you can understand how to better position for financing. In credit, there's what they call the 5 C's of credit. But it has been modified. We now have 7 C's of credit. And I will read those 7 C's of credit to you. While I mention those 7 C's, I will want you to let the meaning sink in. And it's only when it sinks in that when you will understand where the lack of financing for agriculture stems from. The first is character. Character. One of the tenets from what I saw from the university anthem is that you preach character there. And character is what defines a man. Character is that thing that defines you. So character transcends you as an individual and moves into your business. What is the character of this people? The next is capacity. What do we mean when we talk capacity? So, you're doing a business, you have a mom and pop shop in one corner, and all of a sudden, you're doing in a year, you can do 1 million. But all of a sudden, you want to borrow 100 million. There's no capacity in that. The next is capital. And when we say capital, what do we mean? If you believe in a business, you put your money into it. We always try to evaluate what volume of your own finances has gone into the business that you want to borrow to fund. The money you deploy into your business is equivalent to the belief you have in that business that you're putting money into. It's called, other people call it your skin in the game. What is it that you have denied yourself of to grow this business before you start looking for external capital to grow the business? And then we'll look at collateral. Collateral it means the same thing that everybody knows. What is collateral? If I'm not able to pay, this will take care of my exposure. And the other thing another part of credit is called under the 5 C's is condition. Condition has to do with the terms around the facility that you're being given. There are times that you give a loan and you see a customer is eager to sign no matter the condition you give him. I'm scared of that kind of customer. I won't give you. But you see the customer that comes to take each of the conditions and you discuss it with respect to the business. That's a customer that understands what he's doing and understands the impact of this condition on his business. So initially the conditions are generic, but by the time you come, you can still negotiate and turn those conditions to mirror your business. Those are the customers I want to deal with. Then in expanding it, they added 2 more C's: capability and credit. Capability is simple. I've seen Doug and his wife. They are capable, they know what they're doing. But I just heard what they described that they were doing. All of a sudden, I want to go and replicate it somewhere else, in another place. I don't have the capacity. I will fail. So, credit assessment goes beyond all the initial 5 C's, but the next we need to understand who is doing this and what is your capability in driving what you want to drive. And last is the credit itself. What do we mean when we say credit? Businesses, through loans, businesses can die from borrowing. Borrowing in the sense that if I need 100 million for this business and you give me 50 million and I accept it, I am killing that business. I will never fully to the potential that is supposed to come up to make an impact. So those are the basics of credit, like we have said. So I will go into challenges of financing agriculture in Nigeria. Despite agriculture's economic importance, Nigerian farmers face persistent financial barriers, and key challenges include the following: limited access to formal finance. Rural farmers have limited access to banks and formal lending. A World Bank survey showed that 60% of rural communities have no bank branch agent or ATM. As a result, under 4% of total bank credit goes to agriculture, and most smallholders rely on informal lenders or family funds. Informal loans often come at exorbitant interest rates ranging from 10% to 100% in some cases, which can trap the farmers into a perpetual cycle of debt. Lack of acceptable collateral. Smallholder farmers typically lack titled lands and other assets that banks require as collateral. The absence of secure land rights or registrable assets make it hard for farmers to obtain loans from formal institutions. This is a structural issue. About 90% of rural land in Africa is undocumented, leading banks to view lending to farmers as unsecured and high risk. And I'm sure a lot of you will state. So let me talk about my state, where I come from. Politicians have turned land rights into political campaign. So you have some states that governors have not signed COOs for anybody in a very, very long time. I'm not sure that's the case with the state, but I can tell you some states in Nigeria that based on our dealings with them, they've not signed COOs. In years, different successive administration that comes will void all COOs signed by previous administration, and the chain continues. This makes it difficult for people to get the normal values that you derive from leveraging the land assets which they have. It's a major issue. These are not issues that the farmers are going to solve or the banks are going to solve. But in identifying these situations, it's also things that government should look into, because government is the one that creates an enabling environment to allow private sector to thrive and allows banks to lend to private sector. Perceived high risk in agriculture. Lenders consider agriculture a high-risk sector due to its vulnerability to weather extremes, pests, diseases, and price volatility. In Nigeria, frequent droughts, floods, and even security issues, conflicts, and banditry in farming areas make lending risky. Many banks remain reluctant to fund agribusiness, perceiving that unpredictable weather and biological factors could jeopardize repayment. This risk is compounded by climate change, which is increasing the frequency of extreme weather events. While I'm not a politician and I'm not talking as a politician, but I think that what is happening in the food basket of Nigeria, Benue and Plateau State, should also give everybody, some worries. And if those things are not tackled, those areas and other areas that are infected by banditry and the clashes, funding in those areas will be very difficult. Because when you fund, after funding, the next step is to monitor and evaluate what you have funded. But if your life is at risk, I don't know who will want to go to a place that is prone to such attacks to go and do the evaluation. So what is the quickest escape? I'm not going to avail finance to this area. And the food security of 200 plus million Nigerians continue to be jeopardized. High interest rates and macroeconomic factors. Nigeria's high inflation and monetary tightening have increased interest rates, making credit more expensive. In 2024, for example, the central bank raised the policy rate to a cumulative 875 basis points in an effort to curb inflation. Commercial lending rates often exceed the 20-25% per annum, as at today is about 35% commercial lending rate per annum, which is prohibitive for farm investments that have long gestations and relatively lower returns. High interest costs deter farmers and agri-SMEs from borrowing for productive measures. The issue of interest rates I was discussing with Prof is actually sad where we are today, where on the altar of economic growth we have sacrificed the economy to rein in inflation. And as it is, the effect of that is still going to take a very long time for the country to come out of it. Because as long as the inflation continues to rise, then the cost of capital will continue to increase. Because of the economists among us, that's where the opportunity cost of where to deploy your money comes in from. And lastly, we have the low public investment in agri-infrastructure. Inadequate rural infrastructure, irrigation, storage, roads, power, and extension services also increase the risk and cost of agriculture, further discouraging private lenders. Nigeria has never met the African Union recommended 10% budget allocation to agriculture, only approximately 1 to 2% in recent years, resulting in gaps in support programs. This policy shortfall means farmers lack the safety net and value chain infrastructure that could make them more credit worthy. These challenges contribute to Nigeria's significant agriculture finance gap. For instance, although agriculture employs many Nigerians, it is accounted for only 3.95% of bank lending as of 2024. Smallholder farmers predominantly self-finance or under-invested in their farms, leading to low productivity. Addressing these barriers is quite critical. Improved financing will enable farmers to adopt mechanization, better seeds and fertilizers, and climate-resilient practices, driving up yields and income. We will now discuss innovative financing models being used to overcome these challenges in sustainable agriculture. I like the word sustainable. Most times, when we use that word sustainable, we use it because of how good it sounds. But I hope we understand what sustainability means. Sustainability means that what I do today will allow generation who are coming behind me to meet a system that is available and that has resources remaining in it for them to thrive, and when they also adopt those sustainability principles, allow future generations to make use of it. So when we're talking about sustainable financing, we're looking at financing that allows us, not just as financiers, but also as business owners, to continuously grow our business. The last problem that we pointed out there, infrastructure, to a large extent, when we travel out of Nigeria and go to countries that have advanced farming systems, people do businesses of farm mechanization. They are not into production, they don't produce. They do farm mechanization. What real estate companies are doing in Nigeria today, you have real estate in agriculture and agribusiness, where people develop lands, partition those lands, provide irrigation, and what you do is you go and rent a portion of that land, pay the renter, buying land, you pay rent to farm on 2 hectares, and when you farm on 2 hectares, you have all the associated enablers in those 2 hectares, and your yield will be higher. A lot of the seeds that we use today in Nigeria is not seed, it's grain that we plant in Nigeria. When we plant corn, my mother does it. I remember that the biggest crop of corn, nobody will eat it. They will not tie it and keep it. So when you're frying garlic, you need to continue to dry it until the next year you'll bring that big cup of corn to plant. What you're planting is green, it's not seed. It can never give you the kind of yield. So when you hear that average yield of production in Nigeria for maize was only of 3 tons per hectare or 4 tons per hectare, that's abysmal. In other countries where you have technology and you use AI to do production, you get yields of 15 tons per hectare. So if I'm getting 15 tons per hectare on my cost of production, why would I not be able to sell my grains far cheaper than what you are selling, getting 3 tons per hectare? Conversely, it's always cheaper to import from those who have adopted these technologies and best practices. So if we're going to move out of where we are today, we must look at adoption of technology and growing and improving what we're doing, specifically targeted at productivity. If our productivity does not improve, we will not go away from where we are. So we're going to look at innovative financing models for sustainable agriculture, and we'll look at blended finance and public-private partnerships. Blended finance combines public, philanthropic, and private capital in structured ways to reduce risk and attract investment into agriculture. The idea is to use concessional funds or guarantees from the government or donors to de-risk projects so that commercial banks and investors are willing to participate. This model is especially relevant in Nigeria's high-risk agricultural environment. By sharing risk and swinging the returns, blended finance can mobilize much larger pools of capital for the sector. Nigeria's NISA example. The Nigerian Incentive-Based Risk Sharing System for Agricultural Lending, NISA, is a flagship case. The Central Bank of Nigeria launched NISA as a holistic de-risking mechanism. When I talk about NISA, I get a bit emotional about NISA. I worked in NISA. I actually left Yomba and went to NISA. Stayed in NISA for almost 4 years. Left NISA, went to the Government Bank of Nigeria, their risk sharing facility. Then from there, I came back to Yomba. The idea, without reading what is here, the idea behind NISA was, can I create a vehicle that gives financiers some level of comfort and assuage their fears in the fears they have in the risk of lending to agriculture? Can I give you a guarantee up to 75% of your risk that if this loan goes bad, I will pay you 75% back? In that case, the person who I am financing, so if I tell them, can you give me 25% of the 100 million loan you're looking for, while I get a nicer guarantee for 75%, I'm sure it's easier for you than looking for 150% cover as collateral for me. So that was the idea behind the setting up of NISA by Central Bank of Nigeria. And NISA was capitalized by, it's not 300 and, it's not, I'm saying 390 million there. There's another 140 million that is not included there. That 140 million, 50 out of that 140 million is for incentive, is for rating for banks that play in NISA, and the other 110 is actually for they call it interest drawback. So the NISA model was banks. You want to charge 23%, no problem. So that you will not say dictating interest rate for you. Because if I dictate interest rate, you will say I'm not going to lend my cost of capital. So if you are charging 23%, not a problem. But for a farmer who you are giving 23%, I'm going to give him an interest rate of 5%. That money is an incentive, a carrot and stick mechanism. So as long as the farmer repays his loan every month, he gets a rebate of 5% of the interest rate that he has paid. And you will agree that this is a novel, it was a novel agreement by Central Bank. So NISA deploys 5 support pillars. The $300 million risk sharing guarantee fund, a $30 million insurance facility, $60 million for technical assistance, is a $50 million again for rating, and I think a $90 million for performance incentive. In essence, NISA provides partial credit guarantees to cover the portion of the bank's losses on agri loans offers. on agri loans. It also offers insurance to cover for weather, with risk associated with weather, and help build bank capacity in agricultural lending. NASA organized training for banks in Nigeria, those that were agricultural SMEs, to train them on the different modalities for agricultural lending. This lending approach has encouraged Nigerian banks to lend more to farmers and agri-SMEs than they otherwise would. While initially capitalized by public funds and donors, NISA model has commercial sustainability in the long run. It demonstrates how strategic blending of funds can tackle the specific market failures like risk perception and lack of lender know-how that inhibit agricultural finance. Other international initiatives. Nigeria is not alone. International institutions are also embracing blended finance to drive agricultural investment in Africa. In March 2025, the African Development Bank announced plans for a $500 million smallholder finance facility designated to unlock about $10 billion in financing for African farmers and agri-businesses. This facility will deploy multiple instruments like trade credit guarantees, first loss capital, and performance-based incentives to reduce lenders' risk and transaction costs. The goal is to bridge Africa's approximately $75 billion annual agricultural financing gap by crowding in commercial banks and investors. Similarly, funds like West African Initiative for Climate Smart Agriculture use blended finance to support climate resilient farming. Whites can pool public concessional funds from ECOWAS and partners to offer subsidized loans and guarantees for agri-businesses adopting climate-smart practices, lowering interest rates and providing technical assistance incentives to incentivize banks to lend to sustainable agriculture. Another incentive in this guise is also what the World Bank did when they set up the Development Bank of Nigeria. At the point of setting up the Development Bank of Nigeria, the lenders that came together to bring funding for the Development Bank of Nigeria, World Bank, AFDB, Economic, ECB, European Commercial Bank, KfW of Germany, they came together and they created, it was a $1.5 billion that was raised for the Development Bank of Nigeria. And then there's another $500 million that was to be activated if they set up a credit guarantee company to drive lending to SMEs. SMEs, so apart from agri-SMEs, the regular SMEs are also underfunded because of the risk associated with small and medium enterprise businesses. So a company called Impact Credit Guarantee. So when I left NASA, I went to Impact Credit Guarantee as Chief Operating Officer was created. The role of Impact Credit Guarantee was to do the exact thing that NASA is doing, which is bearing partial credit loss for exposures to SMEs, up to 60%. But if it's women-owned business, that risk sharing will increase to 75%. That was what Impact Credit was on. And when DBN operationalized Impact Credit Guarantee, they had access to a further $500 million lending line, which are going to drive the growth of SMEs in Nigeria. So, blended finance is actually a very important and crucial way to use to drive penetration of credit to underserved sectors in the economy. Results. Blended finance has shown promising results. It unlocks private capital by assuring investors that a portion of any losses which they incur will be absorbed by junior capital or guarantees. A recent analysis by ASILI Africa covering East African lenders provides compelling evidence of blended finance effectiveness. For example, a partnership where philanthropic capital from AIFA International co-funded loans through the agri-tech firm Hello Tractor led to sustainable profitable lending to previously unbanked farmers. I will explain this. Hello Tractors Farm Agreement Financing Program, supported by a $2.5 million catalytic fund, achieved a 100% repayment rate among first-time rural borrowers, an outcome made possible by blending grant funding with commercial lending and using technology, more of technology. These examples illustrate how blended finance and public-private partnerships can reduce the perceived risks in agriculture and make lending viable. By pooling resources for credit guarantees, interest subsidies and capacity building, PPPs in Nigeria could scale up innovation. Example, mechanization service, irrigation projects that struggle to attract purely private financing. PAFA is one of the international donors that fund agriculture, and they took a dive with Hello Tractors in East Africa. Hello Tractors design motorized tractors, not the heavy tractors that you see, but what can be used by smallholder farmers. And people who hadn't borrowed before, who had no financial records, who borrowed for these tractors, were able to pay back their loans because technology was also used. Further down in the note, Internet of Things, talked about AI were used, and you could identify where a tractor was working, the volume of work it had done in a day, and the expected revenue to come from that volume of work from the tractor. And I refer you back to my opening, and I gave you the 5 C's of credit, and I told you that character was number 1. So you can imagine, for those who don't have character and you take a tractor, and you monitor to use the tractor for 10 hours, and you come back and say, I don't know what to do, which is, you understand? So that's why I said we should be able to link these things, the theory of credit, the practice in real life, and the realities that the farmers face in the course of accessing and looking for credit. Value chain financing, that's financing through buyers and aggregators. Value chain finance refers to financing integrated into the agricultural value chain, often provided by buyers, processors, input suppliers, or other actors who do business with farmers. Instead of relying on traditional collateral, this model leverages the trust and contractual relationships in the supply chain. For example, a commodity buyer might advance seeds and fertilizer to smallholders and recover the cost by deducting it when buying the harvest. This form of finance directly links credit to market access, aligning the incentive for farmers and off-takers. But one thing that we noticed, a challenge that goes with this is what we call side selling. So I give you have land and want maize. I fund you for fertilizer, I fund you for the seeds. We agree on the cost. And I tell you that when you harvest, we'll grade and weigh. Then we will not fix market price. As at the day of harvest, what the market price is what you will sell to you. But you discover that most times, when it's time to bring this agreement, farmers go in the night and harvest and sell somewhere else, and you come and tell you that the harvest has gone. What does this boil down to? Character. Character. It is key. And for you younger ones who are coming up, like I said earlier, character is a defining factor in your life. The height you're going to achieve is dependent on your character. Everything might be wrong, but if you have a good character, it will take you time, but you will definitely make it. In Nigeria, value chain finance has emerged as a significant source of credit for smallholders. A 2021 nationwide survey found that loans from traders or commodity buyers make up the largest portion of smallholder finance. However, only about 6.5% of farmers can access this form of credit. In other words, value chain finance is impactful where it exists, but it reaches relatively fewer farmers so far. Those who participate benefit from tailored credit, often in kind, inputs, or working capital that they will struggle to get from banks. Typically, inputs are provided on credit before planting, and the loan is repaid in kind with a portion of the crop at harvest, because the lender, who is also the buyer, has a direct stake in the crop and a relationship with the farmer. Interest rates are often single digit, and repayment rates are high. Many value chain programs report 90% repayment, far better than generic bank lending to farmers. So I'll give you some examples here. One notable example, before I give this example, I'm sure some of you have also heard of Babangana, Kolamasha's program is the backbone of Kolamasha's program is this value chain finance. Kolamasha comes to a community. So when I come to Ota is an agrarian, I'm just using an example. Ota is an agrarian community, and there is a valley in Ota. And I go to the valley. I say, I want to do farming. They give me land, and they will call Ajoke. Ajoke has land there. Tunde has land there. Then Eze will sneak from behind and come and say, I want to join. Meanwhile, the valley does not know Eze. So the success of this model rides on integration with the local community, where the farmers are identified. And as a cooperative, you know yourselves. You know that if Tunde fails to pay back, he is jeopardizing the whole people getting funding for their next year. So examples in Nigeria. One notable example is the Central Bank's Ankoboro program, APP, launched in 2015. Under the Ankoboro program, the CBN provides funding to aggregators such as balers or large-scale farmers, who are also called anchors, who then on lend inputs, seed, fertilizer, and cash in some cases to smallholder outgrowers tied to them via contract farming. The smallholders repay with their produce, which the anchors buy. By 2018, ABP Ankoboro program had disbursed approximately 118 billion naira, roughly $300 million in such integrated loans. In fact, public intervention funds like ABP have financed an estimated 50-75% of all value chain credit in the market in those years, demonstrating how the government can kickstart value chain financing. Private companies were also active. Example, major rice millers in Nigeria major rice millers in Nigeria and such integration also took such loans. Major rice millers in Nigeria have outgrower schemes where thousands of farmers receive inputs on credit and guaranteed buyback of paddy at harvest. Another innovative player is Afex Commodities Exchange. Afex provides a platform for farmers to sell their produce and facilitate input financing. Afex has partnered with microfinance institutions to fund inputs for farmers, and it issues commodity-backed notes through its COMEX platform to raise capital from local investors. As of 2022, Afex had about 80 billion, that's $200 million in assets under management in such instruments, indirectly financing thousands of farmers via aggregators. So what Afex was doing, most times when farmers go to farm, one of the greatest problems that they have is how will I sell my produce? How will I sell my produce? Which is major. So what Afex has tried to do is to create an exchange, like a stock exchange. There's a commodity stock exchange in Nigeria today. Agfex was very involved in designing that commodity exchange. I was also in the panel that worked on the commodity exchange. So it gives you some level of comfort that even if I produce now, because by the time of harvest, prices are usually low, I can actually take my commodities, my 5 tons or my 10 tons of maize. I can go to Agfex and say, receive it for safekeeping for me. Give me 10% of the value and hold it in safekeeping. By the time prices of goods start going on, sell my maize, take back your 10% and your interest and give me my money, so that you don't have to sell at that lowest point. So that paper that they have given me, it has not been approved yet. The last government did not sign that. But we're looking at a situation where when a farmer takes his commodities to the exchange and he's given a receipt, a warehouse receipt, he can take that warehouse receipt and go to the bank and say, I have this commodity, I need X amount of money, and you should be able to get financing based on that. So this is part of widening the gap that financing can come for farmers, such that you are not at the mercy of the people that come to prey on farmers when they harvest, but you can also have gains of when commodity prices start rising. So value chain financing mitigates risk by tying credit to purchase agreements. Farmers know that they have buyers, and the lenders also have a reduced default risk by deducting payment at source. Because of this built-in security, interest rates can be much lower, often between 5 to 10% annually. And loans are short-term, aligned to the crop cycle. Many programs also bundle training or extension advice to ensure the farmer's success, since the buyer, who is also the lender, wants a good harvest. The high repayment rates, greater than 90% observed, indicate that value chain financing is sustainable when done well. However, challenges include limited scale. It tends to be confined to organized value chains like rice, cocoa, cotton, and doesn't easily reach farmers in loosely organized markets. The aggregators also have a financing constraint. The trader and processor need substantial working capital to pre-finance hundreds of thousands of farmers. Here is where blended finance can intersect. Example, Nigerian aggregators often take loans from banks to fund their smallholders. From a policy perspective, strengthening value chain financing means supporting aggregators with credit guarantees, ensuring fair contract terms for the farmers. Overall, value chain finance aligns well with sustainable agriculture goals. It encourages a business approach for smallholders. It can be structured to incentivize good practices, quality standards, sustainable methods as part of the contract. Scaling up this model in Nigeria from 6.5% it is today to say 50% in the next decade will require replicating it in more value chains and improving market linkages. Agricultural, insurance, and risk management. So when we are talking of lending, banking, risk management is key. So as a marketer in the banks, you are the first line of defense. So you wear the risk cap. First of all, you identify the risk before you even proceed. Agricultural insurance is a financial safety net that can compensate farmers or lenders when crops fail or disaster strikes. By transferring the risk to an insurer, insurance makes banks more willing to lend, since the loan can still be repaid even if yields are lost, and gives farmers a fallback in bad years. Agriculture insurance has traditionally been underprovided in Nigeria, but is increasingly considered a necessary component of sustainable farming. Current state of insurance in Nigeria. Insurance penetration in the Nigerian farm sector remains extremely low. Only about 1% of Nigerian farmers are insured. The Nigerian Agricultural Insurance Corporation, NAIC, a government-owned insurer, has been the leading provider of insurance since its establishment in the mid-1980s. NAIC offers subsidized crop and livestock insurance. The government pays 50% of the premium for small farmers. In the last 5 years, between 2019 and 2023, NAIC reports that the provided coverage worth $1.01 trillion, about $2.2 billion, to roughly 1.25 million farmers. However, check this contrast. The premium collected over that period were only 8.5 billion naira. This suggests a heavy subsidy and low coverage, relative to the potential. In fact, industry experts estimate Nigeria's agricultural insurance potential is around $600 million in annual premiums. But actual premiums in 2021 were only $15 million, just about 1% of the potential. This indicates a huge gap, because most farmers remain unprotected. And banks know that an uninsured farmer could be wiped out by one bad harvest. Consequently, lenders charge high risk premium to avoid that sector. A World Bank assessment noted that banks are reluctant to serve farmers because of the high risk in crop farming without insurance. To expand coverage, Nigeria has begun implementation of index-based insurance and other innovative products. Index insurance pays out premium based on an index such as rainfall or average yield in an area, rather than individual farm losses, which makes it cheaper and easier to administer via technology. Between 2017 and 2018, NISON, in partnership with insurers and tech firms, launched the Area Yield Index. This was actually under my department, the index insurance. There was Area Yield Index, there was the Crop Yield Index, there was the Weather Yield Index. And it was easier and cheaper for farmers to insure their farm because the premiums were lower and payouts were also a lot easier. And then reinsurance was also encouraged. So we launched the Area Yield Index Insurance and Weather Index Insurance schemes aimed at reaching millions of farmers. The plan was to scale coverage from about 500,000 farmers to 3.8 million by using a technology-driven hybrid index insurance, combining weather data from the Nigerian Meteorological Agency, INNOVATIng. I'm glad that you have a collaboration with NIMET, because we also collaborated with NIMET and got data from them. This kind of product leverages remote sensing and historical data to trigger payouts quickly when a drought or flood occurs, without requiring an on-site loss assessment. Because when you look at the remote data sensing, you could actually see the damage. Another innovation is micro-insurance bundled with farm inputs or loans. For example, some fertilizer distributors include a weather insurance cover with each bag sold, and some microfinance agri loans automatically enroll the borrower in an index insurance policy. These approaches lower the barrier to adoption. The farmer might not even have to pay cash upfront for a premium is built into the service. The role of AI, which is our core talk today. AI, artificial intelligence, remote sensing, and big data increasingly enable modern agricultural insurance. So, if you're doing insurance, for those who have talked to actuaries before, data plays a major role. And data is not just data of today. It has to be data that dates back 10, 15 years. And in that data, when you look at the data, they call it big data, you can see trends in that data. And those trends and predictabilities help in making decisions for insurance. Satellite imagery, machine learning algorithms are used to process crop health and estimate yields remotely. which help insurance evaluate claims faster and more accurately. For instance, high-resolution satellite data can identify drought stress in a region. If the rainfall drops below a threshold or the vegetation index indicates crop failure, an impact insurance policy can trigger automatic payout to all affected farmers. This reduces disputes and administrative costs. Pilots have used AI models based in Kenya and Zambia to correlate weather data with crop losses, enabling payout within days of disaster. Nigeria is looking to adopt similar methods. NAIC has indicated interest in drone and satellite-based crop monitoring process. I know that NAIC is owned by government, but Midway Insurance is also doing private sector engagement to drive the index-based insurance in agricultural lending. Effective insurance unlocks financing by reducing default risk. From the lender's perspective, if the farmer has insurance coverage for drought, for instance, the bank can be named as a loss beneath, meaning that if drought hits, the payout covers the loan. This kind of risk transfer encourages banks to lend more freely or at lower interest rates. From the farmer's perspective, insurance provides stability and confidence to invest in higher yield methods. It turns disasters from catastrophic losses into manageable setbacks. Over time, widespread insurance can also encourage the adoption of climate-smart practices. Some index insurance programs give premium discounts to farmers who adopt resilient seeds or irrigation, thus promoting sustainability. The major challenge is affordability and awareness. Many smallholder farmers are unfamiliar with insurance or distrust insurance outrightly. Government support is key here. Subsidies and education can rapidly increase uptake. For example, the African Risk Capacity Initiative is a continental sovereign insurance pool that works with countries like Nigeria to support local crop insurance schemes. In summary, scaling up agricultural insurance, traditional multi-peril crop insurance and innovative index product is essential to de-risk agriculture finance. Nigeria's goal of reaching millions of insured farmers will require continued innovation, strong public-private collaboration, insurers, agri-tech firms, whether entities and banks, and smart use of technology to keep costs low. AI-enabled digital finance for agriculture. The rise of fintech. I'm sure most people here have OPay account. OPay, Money Points, FanPay. Yes, that's fintech. I don't know if anybody knows FanPay office. Do you know where OPay office is? Nobody does. You will receive your card. They have an agency that does distribution. You just go there and sign and collect your card. You have never seen their brand. So you can imagine me that have a branch in our In fact, we have 286 branches that we have to power by with diesel when there is no light, or pay band A electricity bill, competing with a bank that does not have a building. Just imagine it. The rise of fintech and artificial intelligence is transforming how farmers access financial services. AI-enabled digital finance refers to leveraging algorithms, data analytics, mobile technology to more efficiently provide rural clients with credit, payment, and insurance. In a country like Nigeria with high mobile phone penetration, even in the rural areas, digital finance holds great promise to bridge the gap in the unbanked farming population. Several fintech startups now offer app-based or USSD-based lending tailored to farmers. So what they are doing is we have also as banks, so any bank that has a holding company also has a fintech arm, because we also have to become a thing, because that is the future. That is where the world is moving towards. Digital lending, you don't need to come into the bank. If you fill in the forms, a digital algorithm looks at your full bill, how much data you use, who will call, how much money you send out, how much money you receive, and it profiles you. And they tell you you qualify for 50,000 naira credit. But they are suffering from the issue of character. A lot of people throw away those SIM cards and take another SIM card and they move on. When it happened, they had to run to CBN, and CBN is now mandatory for you to put your BVN. So with your BVN, no matter where you're hiding the money, except it's not in your name, they can get the money. These platforms often use alternative data like mobile phone usage, geospatial data, social networks, and farm records to access credit worthiness. Rather than formal credit history, which most smallholder farmers lack, AI, artificial intelligence, and machine learning models are at the heart of this credit scoring system. For example, Farm Drive in Kenya and another service in Nigeria analyze everything from the farmer's mobile money transactions to satellite weather data in its location to generate a risk score. In Kenya, Apollo Agriculture has pioneered an AI-driven approach. It builds credit profiles for the unbanked smallholder using machine learning processing large volumes of data, including satellite images of the farmer's field. Based on this insight, Apollo provides inbuilt loans via mobile phone and even gives tailored agronomic advice through automated SMS voice messages. Such a model dramatically lowers the cost of serving rural farmers. AI automates what loan officers are traditionally do. As a result, Apollo's clients have seen significant productivity improvements. Many farmers doubled their maize yields by applying the recommended inputs and practices. One farmer reported his maize crop now has 2 to 3 crops per stem versus 1 crop before, after following Apollo's guidance on fertilizer. This demonstrates how digital credit plus advisory can tangibly boost output. For those of you that have gone to Kenya before, I'm sure you must have a M-Pesa. It's their mobile money listing. And with that mobile money, people, they do lending to people studying your, using big data and analytics, you know. I don't know if we want to go. I'll soon try this up. The Nigeria's fintech sector is dynamic, and several firms focus on agriculture. We have the likes of Tribe, for instance, uses a crowd investment platform to raise funds that finance smallholders, and it employs AI to track farm progress and manage risk. Crop to Cash provides a digital payment solution for agribusinesses that also builds credit profiles for farmers by recording their sales. One standout Nigerian example is still the Hello Tractor that works in Kenya. Chihel, that's the name of the guy behind Hello Tractor. It's often called the Uber of tractors. So when you want to get a taxi, you go to your Uber app and you book your ride where you're going. So there's an app for tractors designed by Hello Tractor. So if I have a farm in Shane, I book for the tractor and I give the area of my farm, it gives me an estimate of my cost. And if I click send, I'll get the tractor. I'll come and do the job and I'll make my payment. Hello Tractor connects tractor owners with small farmers who need tractor services. Recognizing that many tractor owners needed financing to purchase equipment, Hello Tractor partnered with lenders and investors to create a pay-as-you-go tractor financing model. With what's revolutionary is that the tractors are fitted with IoT, Internet of Things device that monitor their usage, hours, location, and maintenance need. And an AI-driven platform analyzes this data. This allows Hello Tractor and its financing partners to underwrite loans based based on the asset's productive use rather than the borrower's credit history. The data assures that the tractor generates income and can secure loan independently. The result has been impressive. 100% of the loan tractor's borrowers were previously unbanked, yet the company has achieved a 95% plus repayment rate on its portfolio, far above the norm for agricultural loans. A benchmarking report found the loan tractor's loan portfolio has stronger repayment and profitability than many commercial loans, thanks to tech-enabled cost efficiencies. By late 2024, Hello Tractor, with support from Maiden International Philanthropy, in a blended finance setup, facilitated 88 tractor loans, starting at about $22.5 million, and achieved 100% repayment among first-timers in that cohort. This success is attributed to AI-driven monitoring, a 5-year repayment loan aligned with cash flows, the operator training program, illustrating how digital innovation can crack the finance puzzle for equipment and mechanization. AI for credit risk. Banks and microfinance institutions adopt AI tools to improve agricultural lending. For instance, AI algorithms can analyze satellite data to predict crop yields before harvest. A lender can use this to decide loan sizes or detect if a farmer has struggled repaying, if indeed there has been drought that has severely reduced the expected yield. AI can also incorporate weather forecasts, market price trends, and farmer behavioral data like repayment patterns in savings group into credit scoring. The World Bank notes that data from farm apps and remote sensors can be used to generate credit risk assessment for farmers, enabling finance providers to make informed decisions. In practice, this means a bank could use an AI model to approve loans within minutes via a mobile phone, even for a farmer with no formal credit history. This model's decisions is based on proxy data and predictive analytics. This significantly lowers the barrier of accessing credit. Moreover, once a loan is disbursed, fintech platforms use AI to monitor loan utilization. Example, ensuring farmers buy fertilizer with the money and trigger collection or advisory if risks emerge. Mobile payments and financial inclusion is still part of AI. Digital finance is not only about credit, payment systems are equally crucial. Mobile money services allow farmers to receive payments for crops and to pay for inputs or insurance premiums digitally, building a transaction history. In Nigeria, initiatives to deepen mobile money in rural areas, for example, agent banking networks are expanding, and all this feed into the agri-finance ecosystem by generating data and reducing cash handling risk. Some startups are bundling services. A single mobile platform might offer inputs, e-wallet, vouchers, crop sales, insurance, and loans, creating a one-stop shop for farmers. AI chat boxes are even being used to provide customer service and agricultural advice in local languages, which keeps farmers engaged and informed. Beyond direct financing, AI contributes to productivity gains that make agricultural ventures more bankable. For example, precision farming, we've heard of soilless farming, and then precision farming. These are terms that are new in the sector, and they have also become very relevant, and it's part of what we are doing. In conclusion, financing sustainable agriculture is a multifaceted challenge. But as we have discussed, many promising solutions are now being applied. For Nigeria to realize its potential, examples include the bread basket that feeds its 200 plus million people and contributes to Africa's 1 trillion food market by 2030, we must scale up this innovative model. That means we need to strengthen partnerships. The public and private sector need to collaborate closely. Government should provide enabling policies, funding and risk-sharing instruments to catalyze private lending. Enhanced public-private partnerships can pool resources to offer credit guarantees, interest rate subsidies, technical assistance. An example could be expanding the anchor borrower type program and simultaneously involving commercial banks and impact investors. We also need to scale digital and AI solutions. We must embrace digital finance as a national strategy for agricultural development. This involves investing in rural connectivity and digital literacy so that farmers can use fintech apps and supporting startups that develop AI-driven tools for farmers. The government and central bank are also encouraging mainstream banks to adopt alternative credit scoring models, perhaps by opening databases or supporting digital agriculture. We must also embrace policy reforms and enabling environment. Policy plays a crucial role. Continued reforms to improve land tenure security would allow farmers to use their land as collateral. Policies that support mechanization, irrigation, and market access will make agriculture more profitable and creditworthy. Significantly, Nigeria can boost its budget for agriculture towards the 10% Malabo aid target to fund critical infrastructure and blended finance initiatives. Also, keeping macroeconomic stability, taming inflation and currency volatility will also help make agricultural projects more bankable. In summary, a business-friendly environment for agribusinesses include stable input prices, accessible extension services, and a functioning commodity market. These are critical. Capacity building for both the farmers and the lenders so that they can benefit from financial literacy programs, which will always help to grow our understanding of the sector. Sustainability and impact. Finally, as we innovate in financing, we must keep sight of sustainability goals. Innovative financing should prioritize climate-smart agriculture, regenerative practices, and inclusion of women and youth in businesses. In conclusion, Nigeria's experience from its challenges to emerging solutions provides valuable lessons. With the right mix of financing model and technology, an agrarian economy can be revitalized. The age of AI offers tools to manage risk and inefficiencies that once kept agriculture undercapitalized. Nigeria can overcome the long-standing financing bottleneck by leveraging blended finance, value chain integration, insurance, and AI-powered digital platforms. This will unlock the full potential of our farmers and food systems, driving rural prosperity and food security. For the students and future leaders here at Bells University of Technology, the critical thing to remember is that innovation is crucial in finance, as it is on the farm. Solving the agricultural finance puzzle requires creativity, collaboration across sectors, and a willingness to embrace new technology. The progress we've seen, higher loan repayment through data-driven lending, farmers doubling yields with AI advice, millions of dollars flowing into agribusiness via blended funds is encouraging. There is much work ahead, but with sustained effort, Nigeria can build an agricultural financing ecosystem that is inclusive, sustainable, and resilient in the future challenges. Thank you.
Please can we sustain and give our guest speaker a standing ovation of round of applause. Thank you so much, sir. Thank you so much. Were we able to get one or two things from? Please let's continue. Let's sustain round of applause and go back to the seats.
To add to what she has just said, the materials for the presentation of today can be found on the CoFast page on our website, that is www.bellsuniversity.edu.ng. Thank you.
Please let our seats. Do we have any questions? financial models for sustainable agriculture and food systems in the age of AI. So if you have any questions for our guest speaker, now is the time for us to simplify by raising our hands so that we can get the questions and then he can help us answer. Anybody with questions? Anybody with questions? Okay.
Thank you very much. We listened to this presentation and it is highly stimulating. Probably the leaflets that have been distributed will show what Union Bank is doing on agriculture. But in the olden days, especially in the time of the United Bank of Africa, there were much cultural practices and it was evident. But of recent, we don't see banks projecting the activities with farmers and whatever they are doing with them. So are there programs that have been initiated by Union Bank which people can plug into as agricultural practitioners? Thank you very much.
We have another question here.
Thank you so much for the lecture, sir. Mine from policy reforms is similar to, directed it to Union Bank. Mine is Nigerian farmers. What are the reforms, policies that government has to do to encourage mechanization in agriculture? Thank you.
I'm Dr. Joseph Odubodo. First of all, I want to appreciate Mr. Eze Wakam. This is a very brilliant presentation. In fact, I wanted to ask, I know an agriculturist, because I really learned so much on agri finance, about innovative finance. And also, I want to see this as a form of proposal, you know, because the second one side, there's more this happening. Now, the question now is this: how far has your bank gone concerning implementing some of these innovations in agriculture? Thank you.
One more question. Last question. My name is Chidi West. I was informed very well. It's quite elaborate. But the question is, what plan do you have for the younger ones to be attracted to agriculture? We are talking about the ABC of agriculture, but nobody is talking about the XYZ of agriculture. Now, the ABC of agriculture is to produce food, to produce this. You said something about, post-harvest courses and so forth. Now, if you look at it very well, we find that most of the youth are not interested in, let's not be honest with ourselves. Most of the youth are not interested in agriculture. Some of them are only interested in, you know what I want to say. Let me critique myself. You know what I want to say. So most of the farmers we talk are all getting old. Some of them are getting older. Now you told us about fintech but I keep asking myself, how many of these old-time farmers, how many of these old farmers know about farm pay and farm roll and payroll and all the rest of them? So how do you now synergize the energy of the youth and the experiences of the elders? Because they have to work in tandem for them to achieve it. But then it's like most of these learning institutions are not looking at it. I remember myself, there was a time I went to cooperative, I don't know whether that bank is still there existing. They told us to come and open an account. But up to now, I don't even know where my district is. Because they told us to open an account, and if you go there, you don't get anything. There's one thing I discovered. Let us tell ourselves the whole truth.
Now, I'll take this question from different perspectives. You mentioned you pronounce the name of one of our competitors in the garden. As at the time that the Union Bank was very into agriculture, I don't think they were seeing part of the Union Bank. That's the truth. So I would like to take you, I lecture the one part joint banks. So I like when you understand from the basic sense, I appreciate what I'm trying to say. Banks are owned by people, and the ownership of the bank to a large extent determines the drive of the business. Now, as at the point that Union Bank was blazing the trail in agriculture, Union Bank was doing as an agricultural friendly bank. The directors and the owners of Union Bank had agriculture as a focus. At some point, Central Bank took over and changed the board. A lot of banks have issues. Some have direct intervention, where CBN took over, and then the names of the banks were changed. The Union Bank retained its name, and there was a new management, and then external people bought Union Bank. Atlas Mara, owned by Bob Diamond. Bob Diamond used to be a former managing director of Barclays Bank, which is the parent company of Union Bank. When he left Barclays, he wanted to invest in Africa. At the point when he took over, agriculture was not a focus, retail banking was a focus. So everything in Union Bank was about retail banking. At that point, Agri lost its focal point in Union Bank. Now, the new management that is in Union Bank today is reviving that truth. Like I said, I used to be in Union Bank before. I went to NISA, went to the Global Bank, and I came to Union Bank. So I thought maybe 2 years, we're trying to review our books again. And so far, I don't think we're doing badly, considering what the environment is. Because I believe that over time, you will see us coming back. Because to a large extent, in the active field of play, Union Bank remains a force to be reckoned with. There is no area of agri-financing that we are not involved in. And when somebody asks me about, I want to borrow as an individual, as a family, I said, innovative financing. We have left the era of lending to one person for retail family. If it comes, I want a loan because of my family, my family that I have. It doesn't make financing sense. But if you have a cooperative and you have a large land where you can deploy mechanization and improve your yields and your yields can improve the loan, I'll look at it. So at the point when you are coming, even if you don't know the direction you want to go, part of my job and the job of my team is to sit down with you, dimension what you want to do, and tell you how best you can achieve results. Union Bank is still doing that. So if you need working capital financing, if you need capex for expansion, if you need export financing for those who are exporting, Union Bank finances all that. There's none that we don't do. So we are in the game of banking. And the good thing about it is that no matter what, all the enablers that we have. So, I've been practically in almost every other part of where agriculture is done. Those relationships remain. So if I need anything, I just walk in and say, I need this, and I get it. So that's the advantage we have from banking with Union Bank. The other question is the reforms. What reforms that the government is doing with respect to the mechanization? They are referred to mechanization. So, in the olden days, it was common for a farmer to come, a farmer who has 2 acres of land or 5 acres of land, I want to buy a tractor. A tractor is not a car. Our cropping seasons in Nigeria are 2. Rain-fed that we are in now, by the time the rain stops, except there is a dam around you to help in irrigation, then you have to spend money creating your own irrigation channel to allow second season farming. One season farming cannot repay for the tractor. You can't say you can put the tractor on the road and start paying passengers. So that model of financing for mechanization does not work. I don't even encourage it. But two people can wake up and say, all the lands in Otta is 300 hectares. I have an agreement to do ridging and plowing on 150 hectares of this 300 hectares. The owners are going to pay me XYZ amount for this 150 hectares. I need a tractor to do this job. A tractor is X amount of money. I'm expecting Y amount from my yield. We now have a commercial basis for engagement. That's a private initiative that we can do as a bank. But as government, I will not speak on behalf of government, but I know that there are initiatives that government is doing to bring in tractors into Nigeria and give them to farmers. But at the point of giving them to farmers, I was with the director of Federal Ministry of Agriculture and Conservation, and I told him, if you do the model of give one farmer or the politicians take it and they give to their brothers and sisters who are doing farmers, and you tell me as a bank to finance it, I will not. Because I need to understand where you're going to deploy this tractor to get the incomes that you use to repay the loan. I will give one teaching example. I used to work in one bank, and my executive director told me and said, remember, the bank is like a thief. A thief will never go somewhere that has not surveyed and it has 3 escape routes. So that if I enter and the front door is locked, I know that there is a back door. It's the same thing with finance. If I'm doing a finance for you today, I ask myself, what are the alternative sources of repayment for this loan? And we can agree on an alternative source. When I go to the board to defend that credit, my former MD, the current MD of Hong Kong, and my group said, because of you, we're going to install a camera in this room. So that I'll record everything you have said. If this loan goes back, I'll bring it back and I'll sack you. Why? Because that facility will have x-rayed everything and will have taken into cognizance all that will happen and the escape route. That loan will not go back. So when you're talking of mechanization, so there are 2 models of mechanization. There's a government model, you can go to government ADP and foreign tractors, or you have mechanization service providers today in Nigeria. Their job is they aggregate land. When they come to the bank, you sit down, so you're mechanizing 5,000 hectares. How much are you getting paid per hectare? You say 20,000 naira. On 5,000 hectares, that gives you an amount. I need a tractor to do this job. And I have a contract to do this on a yearly basis for the next 5 years. Who can create a cash flow? Who can finance that tractor? And that mechanization happens. And most mechanization service companies do not do just one job. There are a lot of companies that are doing backward integration. They take jobs from these people and they do. But another way, madam, to answer your question, I believe that with the reinjection of capital in the Bank of Agriculture today, is going to also form another source of funding for the Nigerian farmer. And I believe that Bank of Agriculture will also come up with innovative ways of financing mechanization because it has become key and paramount in Nigeria that people must mechanize to improve our yield. A question was, how have UBN implemented these innovations? So I think in my place, the saying is that you're first beautiful from inside before you come outside. Technically, our risk unit, a lot of things we do, they are AI-driven. We use different risk models to simulate various outcomes and possible outcomes. But one thing you must also know is that having internal capacity is good. But internal capacity in every area does not allow for specialization. So we use outsourcing. There are companies that have developed this capacity. They are experts in these capacities. They work with us. So when we will have issues and when we will have aggregation issues where you need to leverage and know what is happening, we'll bring in one of these partners to work with us. A fee So on a fee-for-service basis, a fee is paid for their services and we take their custom. So they deliver this for us. Now, in delivery for me, is it just that I take anything they say? No. I sit down with you and I design and I tell you the things I'm looking out for. You go and configure your system, give me the results the way I want my results to work. So that is how Union Bank has integrated and implementing all these innovations that we talk about here today. The other question talks about attracting the youth to agriculture, that youth are only interested in money. Why would they be interested in money? There is no reason why the youth should not be interested in money. But what we have done, what Union Bank has done today, is to tell you that it is not in whole and compact that there is money in agriculture. Agriculture has extensive value chain. You don't need to go to the farm. You don't need to go to the farm. But you can make a lot of money. I've talked about mechanization service providers. We've talked about people that do agriculture. We have people that have designed a model that uses solar to freeze fish for segments that do fish production. They really deployed it somewhere in Mantua and one other fishing location. You understand? So there are so many things. So when you see a youth that has character, that wants to be productive, he is productive. But you see, for the ones that don't have character, that want to do what they want to do, this lecture, 100 of this lecture will never change them from that. What they need is a shock treatment. And until they get that shock treatment, they will not change. But you see, for the people that are willing to add value and deploy themselves, one of my mentors told me that, you can make money in Nigeria faster than you can make money anywhere else in this world. Why? There are too many problems in this country. Just sit down and think out a solution for one of the problems. Just one solution. Solve the problem. Once you solve the problem, you're the one that will run from the money. And I'm sure that for those of you who are productively engaged in solving problems, you can attest to the fact that it's a no-brainer. So technically, Union Bank is here for the long stay in agriculture. Apart from being in agriculture, we also give free advisory services. I won't charge you if you come to me on advisory as we with agriculture. It's free of charge. Any of our branches that you go to, it's free of charge. Loans, yes, we are actively giving loans. But like I said, we need to discuss and understand what it is that we want to do. For individuals, forming cooperative is about the first purpose. Thank you very much.
Thank you very much, sir. Thank you once again, our guest speaker, for the answers to those wonderful questions. Thank you very much, sir. It's time for presentation of gifts to the guest speaker, as well as awards to some distinguished individuals. So after this section, we'll call on Professor Oluwafemi Enilobo. Thank you very much, sir.
Thank you very much. Please permit me to stand on the existing protocol. Just to remember our guest lecturer, in Bells University, we value excellence. And today, we all agree with me that this lecture has been wonderfully delivered. You can say it's an excellent delivery. And it's in our culture to give a token to the guest lecturer that we have invited. And please, may I humbly request the Vice Chancellor, to please help us in presenting this token to our guest lecturer in appreciation for coming all the way from Abuja to present this wonderful lecture on innovative financing model for sustainable agricultural food system during this time. Please, carry on to this page. Sorry.
My distinguished gentlemen, let me join my voice with all others who have commended our guest lecturer for well put together paper, thoughtfully written, well presented. I must confess that when I got the paper to me, I protested from there. Don't please. Thank you for going through. You reminded me of my tractor hiring unit. In those days, we normally would go around villages to convert for me to come and rent tractors for us to use. What you presented today, the Uber for tractor will solve that problem totally. Thank you so much. That was well put together. So on behalf of the College of Food, Agricultural Science and Technology of Bells, University of Technology, present this award of excellence to receive on behalf of Mrs. J.T.A. But she has a very good person who is who has every reason to here today. Thank you for doing a great job for the excellent and impactful lecture. It was really impactful. You were standing there for an hour, it was very good. I think you're a teacher to recall. Thank you so much. God bless you. In Bells, you don't know that taking back our logo with you. This is from the management staff and students of this. Well, thank you for coming and for this good presentation.
This one, personally for Mr. Eze Mwakama, for ably representing the NDCU. We appreciate you, sir. God bless you.
Thank you for fitting to that big shoe. You did it so well that you presented everything, you looked everything. Thank you so much. This personally for you. We present the mutually beneficial relationship. We have extracted something from him now. He's going to teach in our college in our program. Program is there. Thank you very much. But we see that return. Then, I want to invite one of your lecturers to you.
Incidentally, our Vice Chancellor is engineer. Please, Dr. Welcome to join the engineering in Bells University.
Dr. Oyo to Dean also. Because our staff list is increasing. Agribusiness now. Agribusiness now. So Dean, over to you.
Thank you very much, sir. Why the guest lecturer and Dr. Oyo, please, Vice Chancellor, sir, please kindly wait, sir. I don't have that authority. We are gathered here under the auspices of the College of Food, Agricultural Science and Technology. But you won't know how we have that college without the efforts of the Vice Chancellor. I can still remember that evening that he called me and Professor Daramola. Now you people, what are you thinking and doing about agriculture? And he put the fire in us. And we took on the challenge, and the result is what you are seeing today. It is my pleasure, sir, the college giving this topic for all the efforts. Number one, backing the college, the vision you have for the college, and all the support that the Dean is serving is for himself.
Yeah, from the bottom of my heart. Sorry, when we were inviting the Vice Chancellor, I thought we were going to reiterate what is being done during the award of the doctoral degree. To say, stand and remain stand. I don't have to do it, I don't have to ask for it. When you shall please, you are not hearing us, sir. Thank you. So, in behalf of the college, staff, and students, we want to advocate the indefatigable, seamless, meticulous, and hardworking Vice Chancellor. We want this 6th division that no enrollment is doing agriculture all over the world, but they found out a way to assist in the enrollment of students into agriculture. So I think, not thinking, sorry for using that word. We are the first in Nigeria to give students free tuition to study from beginning to end agriculture. We are grateful for that. On this occasion, sir, on behalf of the college, we need to give you this plaque to show that you are very relevant. You are very relevant in agriculture, and asking you to do more and let the world have enough food through this effort of yours as we celebrate food security in various areas of the world. Thank you so much.
Again, sir, your attention is needed. There is an award that the dean recognized in the college. Every staff in COFAST, Mr. Vice Chancellor, sir, are hardworking, cooperative, and the result of the unity in the college is what we are seeing today. If it had been possible, every staff in the college will have been given a plaque today for all their efforts that they put in promoting the development of the college. However, an individual has been singled out for this award of the dean in appreciation of all the efforts. You will see this individual running around, processing results, and all that. So we have this award of excellence for his staff, Dr. Olayemi Dudu. Please can you come out? For this award of academic excellence, please, the representative of the chairperson of BUPA, can you help us present this award of academic excellence to Ms. Amzat Faridat Damilola? So the HOs will be receiving the award of academic excellence in the nutrition and dietetics program.
of let me congratulate the recipient. I actually speak on behalf of the Miss Alain Oluwa. After she's a very brilliant student, the teacher like it. I happen to teach her in Toronto level, and she performed excellently well.
Thank you very much, sir. I want to call on the sponsor, please, Mr. Sunari, to help us present this award to Ojelade Oluwabolaji Samuel. At this department is just year one, but to encourage excellence, we use their first semester results, and the best in the class is being awarded this award of excellence.
This award of excellence to Ojelade Oluwabolaji Samuel. Under the in the first semester, 2025 academic section, with a cumulative GPA of 4.1. In the Agric and Agri-Tech program, dated in West 2023.
Thank you very much, sir. Dr. Lulu.
Thank you everyone for still staying back to enjoy this college lecture. We are about to round up. It's time for vote of thanks, which will be taken by Professor John Daramola.
Thank you. Giving the vote of thanks, I want to start by appreciating our indefatigable Vice Chancellor for his presence, Professor J.O. Otedio. Thank you, sir, for being here. Let's put our hands together for him. And for every member of the university management, I start from our registrar, Mr. Ernest. Thank you for coming. Also, the bossa, Mr. Shino Adebode, thank you for honoring us with your presence. And not forgetting the representative of the chairperson of BUPF, Madam, thank you for coming. And also the Union Bank, you made our day. You made our day. Thank you. We appreciate Mrs. Oni and especially Mr. Dr. Izadi. Is it doctor? We are giving you honorary doctor. Because you said, we had virtual meeting and you said you love teaching. So I was not surprised to see the VC handing over to our dean as a member of our faculty advisory board and all that. So we expect this will be a beginning of new thing. I also appreciate Dr. Awoyomi because he has been the facilitator of all this. He has been the bridge, yes, through Professor Egolo. He has been so helpful. And not also forgetting all the deans of colleges and professors that were here. Professor Shio, thank you. Professor Ayakura, Professor who was here, thank you for all the deans and professors, and not forgetting St. David Model College. They approached me on Monday and they said they want to come for a big excursion. I said, on Thursday. I said, don't come on Thursday, come today. So they were here and they had a talk and they were part of the seminar. Also, Anulu of Farmers Group, they were here and they had some products on display. The various vineyard, they brought vegetables, and also, coincidentally, I received a visitor from IITA, International Institute of Tropical Culture. Mrs. Vivian, thank you for coming. Also, Farmline Agri Training, Mr. Alford. Also, the Dean of Movers, I congratulate you for this maiden edition. And all the members of the local organizing committee, the staff and students. Ladies and gentlemen, I want to thank you for your presence. Thank you, safe journey. And for those online too, we appreciate you for being part of this. Thank you and God bless.
Whatever has a beginning has an end. And now we've come to the end of today's program. We would like to thank you all for joining us once again. We'll be having group photos after the closing prayer, after the Vice Chancellor and the other principal members of staff have left the hall. We'll be having a seminar on examinations just after now. So please, all staff should kindly stay for that program. We'd like to call on Mrs. Rukaya Stajudin for the closing prayer.
Let's be on our feet for the closing prayer. We give praises and adoration to Almighty Allah. We thank you, God, for the protection throughout this program. We pray as we are living there, you protect us, our brothers and sons. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alamin. Ar-Rahmanir-Rahim. Maliki Yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdina siratal mustaqim. Siratal ladzina an'amta 'alaihim. Ghayril maghdubi 'alaihim waladdallin. Thank you.
Please can we remain standing while the other members of staff. Oh, the anthem. Apologies once again. Okay, time for the anthem. So we start with the university anthem.